And we are also watching airline stocks. That's because there's a conference going on and a lot of these airlines coming out with some updated outlooks. United Airlines in particular is signaling some turbulence ahead. It expects to see a quarterly loss, mostly to do with its labor contract, if not entirely to do with its labor contract. Adjusted loss for its first quarter going to be 60 cents to $1 a share. The company is saying 69 cents is what analysts have been looking for. The company, before talking about it's not that different, I guess, from its prior outlook here, but it does talk about that there's a heavy weight coming from this labor contract. It didn't change its full year earnings, so it seems like it's going to perhaps recover from all of this. And operating revenue in the first quarter will be up 51% year over year because of strong demand, but the stock is falling because of this concern over the pilot's contract.
Yes, and I do have some analyst commentary. This from Citi recommends a stock with a buy, saying expenses are now, quote, front-loaded, though the full year still looks solid. Despite a bumpier outlook for the first quarter, United reiterated all other aspects of its 2023 guide, and then they're recommending treating any big stock price dip as a long-term buying opportunity. So I don't know how big 6% is. I look at the price chart on the 5-year chart here on the Wi-Fi Interactive. This just kind of shows, I like to use 3 to 5 year time frames to see what happened over the pandemic. And this really never even began to reclaim, I guess it began to, but never really quite reclaimed even the prior floor for stock prices here. So that's pretty big there. And that's the case with a lot of these airlines.
Yeah, and just to check quickly on some of the other ones as well, Southwest, which of course had all of those scheduling issues in December, said it upgraded the software tool that it uses to schedule flight crews. That's something it had said it was working on to address all of these issues, right? So that was an update. It narrowed its first quarter operating revenue guidance. We heard from Alaska Air, which cut its first quarter margin forecast because of higher fuel costs. We heard from Spirit Air, which said its operating margins in the first quarter are going to be worse than estimated as well. So a lot of these airlines coming out with this kind of commentary today. And on balance, it doesn't seem like it's quite as good, in part because a lot of them are suffering from these higher fuel costs right now.
Yes, they are.